So do you want to know how to buy a home here at Hampton Roads? Stick around. I got what you need. We're going to talk about it. What's up, guys? Joshua Smith here with Queensberry Advisors at Keller Williams Town Center. And today, as promised, we're talking about home buying. This is a gift for my first-time home buyers, especially. I had you in mind when I thought about doing a video on this. Listen, if you're watching this video, you either have an interest in the home buying process, maybe you're somebody thinking about getting into real estate, but most importantly, some of you have a serious and very important goal in your life to buy property. I honor this opportunity to talk to you about just how to do that. We're going to break down the home buying process in 8 simple steps so you have an overall understanding of what the process looks like, the do's, the don'ts. We're going to break down some facts versus myths and things that just simply aren't true from beginning to end. So hopefully after the end of this video, you feel a lot more secure about the home buying process. One thing I found when talking to clients and people in general, when they're on this real estate journey, and I was actually talking to a colleague of mine about this dilemma in the marketplace. Real estate, a lot of people, too many people, do not understand that they have access to real estate. They have access in the ability to buy their own home. A lot of fear keeps people on the sidelines. A lot of misinformation will keep people out of one of the biggest assets we have here in our country. The market does not dictate your success in real estate. It simply determines your strategy. And that's what we're going to talk about today. You're probably here because you're interested in buying real estate at some point. It could be now. It could be something a year from now, 5 years from now. But it's something that's in your mind for whatever reason, right? Today, we're going to talk about what that actually looks like. Real estate purchasing. And this is a big shout out to my first time home buyers. It can be a very scary, it could be a daunting, it could be a confusing process or prospect. Is there exposure to a home buyer or consumers out there who are buying real estate? Surely there is. There's very few things out here that don't have some type of risk. But when we understand what those risks are and how to mitigate them, there is a world of opportunity that lay before you. Real estate is a very, very important part of building wealth, not only for yourself, for generations to come. So the sooner you can get into the real estate game, the better. So this is going to be my 8 steps to the home buying process right here in Hampton Roads. We're going to go step by step. So treat this like a short masterclass. Get your notebook, have your questions ready, write everything down that I'm going to tell you, because you're going to see it again if you're buying homes right here in Hampton Roads. Write this down. The first step you want to do when buying a home anywhere, I would say, but specifically Hampton Roads. This is the market we're talking about. It's the market I live in. First thing you want to do is hire a real estate agent. Hire a real estate agent. A real estate agent is your fiduciary in this process. They're your advisor. They're your GPS. They're actually probably better than GPS. They're not only your GPS, but they're also the ones that fine tune it to come up with strategy to help you to get where you want to go. So where do you find a real estate agent? What does a good real estate agent look like? This is one of the biggest challenges I found in my experience, is consumers having a lack of understanding and education around how to pick a right agent. This is a big conversation. One of the number one questions consumers do not ask any individual, guy or gal, before they hire them is a very simple one. Do you know what you're doing? Do you know what you're doing, Mr. or Miss Agent? That is a very important question. And I think consumers don't ask this question, because I've never been asked this question in any consultation I've had, is because consumers aren't aware or understand the buying process themselves. So it's going to be very difficult for a consumer to figure out if the agent or the prospective agent they're working with knows what they're doing. And I think sometimes that stops them from even asking the simple question. It's very important you do. So you want to find an agent and you want to have a consultation with them. Even if they don't ask you or book an appointment with you for a consultation, you can initiate that conversation, right? The consultation is an opportunity for you to sit down with this person, this agent, this professional, right? And get an understanding of where it is you are, where you want to be, and how you're going to get there, and what that relationship looks like. Compensation is a big one. How are you compensated? What are you going to do to help me to my goals? Let me share my needs with you. These are very important and pivotal questions that you're going to need to have in some form of conversation with whoever you decide to hire. So find an agent, someone that you're interested in working with. Hopefully it's me. My contacts will be available for you, but whomever, and sit down and have a consultation with them, okay? You're going to complete your buyer consultation. So what is a buyer consultation? I'm going to tell you what it looks like in my practice of real estate. For me, I sit down with my customer, soon to be client, right? I want to sit down with I'm just going to call him my client, right? I treat all my customers like client in the sense of service, right? So the time you sit down at the consultation with me, you're going to feel like you're my client because I want to offer you the transparency that you need. I want to offer you the insights, information, and strategy just the same as you're going to experience when you officially hire me. Okay? So here's what you need to know. What are your needs? At a consultation, most of it is about you. What are your needs? What is your motivation for buying a home? What is your timing for buying a home? What are your future plans once you buy this home? What does that home look like? Who else is going to be living in this home with you? Who else do we need to consider? Do they have 2 legs? Do they have 4 legs? Do you got a mixture of both? What do they need to be comfortable? What are some of your concerns about this process? How do you determine, or what needs to happen for you to consider this a successful process? Have you ever purchased a home before? I'm just going off the top of different questions and how deep it can go during a consultation. And you can sit there now probably, right? And ask yourself or create a list of important questions you may have during a consultation or that an agent should be asking you. Think about these things. So sit down with an agent, have a conversation, ask them, do they know what they're doing? So how do you determine if an agent knows what they're doing or not? Let them know what your plans are and ask them about the strategy they have to get you there. Have them articulate it, right? Let's say you're a first-time home buyer. You want to make this as close, if not fully cashless, as close to a cashless transaction as possible. Ask your agent how they're going to get you there. Hey, it's very important for me to limit my expense. I would really like to buy a home with little to no cash out of pocket to me. Is that possible? If so, how are you going to help me get there? Right? This guide, Homebuyer Guide, has a ton of questions in it. Look at it. A ton of questions about you. What does your home look like? What's important to you? Look through it, really start getting the juices flowing. So not only do you want to ask your agent, do they know what they do, what they're doing, and you want to test their response by asking them some well-placed questions that require detail, like strategy. How are you going to help me get to my goals? Also, ask them about the purchase contract used in our market. What can you tell me about the purchase contract used in our market? What are some things you may want to know, Mr. Agent, if you were in my shoes? Can you explain it to me? Can you give me a high-level overview of the process of buying real estate? These are the types of things you as a consumer need to be asking your client, your prospective agent. And a good agent, you will find when you sit down with them and you have their consultation, they're guiding this conversation in such a way that a lot of these questions were going to be answered, articulated, and demonstrated in some way. Those are great signs that you have a proficient agent in your corner. And like I said, they are going to be worth their weight in gold. So take your time, interview agents, Ask these questions, get a buyer consult, make sure your needs are understood, and make sure that you have a competent agent in your corner. Let's talk about step 2. So the first thing we want to do is get our financing together. So how do we get our financing together? Let's say you're looking at a house for $400,000. Get our financing together. Okay, what are you talking about, Joshua? I don't have a suitcase of $400,000 sitting somewhere. So where am I going to get $400,000 to buy my home? Your lender. You need to connect with the lender. One of the values of working with a real estate agent, especially in your market here in Hampton Roads, real estate agents are people. We know so many people. We know so many pivotal people you'll need in the real estate process, like a lender. Ask your real estate agent, hey, are there any lenders that you recommend I contact to get my pre-approval? And listen, we're going to speak from the perspective of using a mortgage. 80% of buyers in Hampton Roads use a mortgage to purchase their property. First-time home buyers and seasoned purchasers, right? So the vast majority of people are using mortgages to purchase their home. Now, many people I talk to, and it's so sad, especially first-time home buyers, they always tell me, look, I really want to buy a home. This is important to me. It's important to my family, but I just can't afford it. And when I ask them, well, why is it that you think you can't afford it? They always say, I don't make enough money. I don't have 20% down. My credit isn't that great. I understand all those are valid, and all those things can keep you on the sidelines of the real estate game, right? But my follow-up question is, have you spoken to a lender about your situation to verify if you can buy a home? And if it's not now, when will it be? They always tell me no. Once you tell me no, now I understand that you're just running off an assumption. I don't know where the assumption came from. It could have been someone told you. It could be preconceived notions. You're blocking yourself, self-sabotage that I'm not good enough to buy a home. I can't buy a home right now. But I'm here to tell you, the only way you're going to know, unless you are a cash buyer, which we're putting that to the side, we're assuming 80% of buyers are going to be using a mortgage. So I'm going to assume at least 80% of people watching this video are going to be using a mortgage. We're talking to you. The only way for you to know if you are a buyer using a mortgage, leveraging this financial instrument to purchase your home, if you can buy a home, is by speaking to a lender. There is a key. Speaking to a lender, this step is going to set up your success. It's going to dictate your strategy. It's also going to answer some questions, right? I always tell my clients, it's not a matter of if you can buy a home. Yes, you can buy a home. A lot of times it's a matter of when and how we're going to go about doing that. Your real estate agent should have great contacts for you. You also need to do your own research. Google, interview lenders, speak to them, get to know them. Get to know them as like, although technology is quickly changing how we operate in this world, right? These are people. They're not robots. They're not AI talking to you. You're talking to other humans. Get to know, speak to these lenders, right? Ask them questions about the financing process. See if you like them. Everyone doesn't mesh. And that's okay. You can very well work with a lender who you actually like as a person. That's just going to make the process better. Okay. So you speak to lenders, interview lenders, just as you did your real estate agent, right? If your real estate agent is a very well-connected individual like me, like many of my colleagues, like the KW network, right? We have everything you need. We have contacts to get you started. Buyers, you can use any lender that you like. It is your choice. A real estate agent is here just to guide you, provide you information, to give you perspective, but we do not, I repeat, we do not make decisions for you, nor especially making decisions on your financing, okay? So you're going to speak to a lender. And what you want to do is obtain a pre-approval. Okay, so what is a pre-approval, right? Well, let's back up a little bit. Getting a mortgage, right? What is that relationship between the lender, let's call that the money people, and you, the client, right? The home buyer, first-time home buyer, right? The rock star. You guys are going to talk. And in this conversation, the lender is trying to find out if their money that they're going to lend to you is safe. Are you going to pay it back? right? Most mortgages, let's just going to keep it simple. Not most mortgages. There's many loan products out there. Most buyers are using some type of fixed rate 30-year mortgage. Okay. So a lender is going to decide, they're trying to figure out if you, as a consumer, are a safe bet to take a risk on. And how do they look at that? They look at your income. What are your debts? You're bringing money in. How much money are you putting out for your bills, your obligations, everything you need in your life, right? What do your expenditures look like? What percentage of those expenses eat up your income, right? Because a lender, um, um, contrary to popular beliefs, right? Lenders aren't in the game to screw consumers. They don't want to over leverage you, right? So if your debt to income ratio is high, right? Let's say 70, 80% of your income, a lender looks at that as, hey, if we lend money to you at these terms, today's interest rate or whatever, it's likely you're not going to have any money left over. You're not going to be able to pay this back or keep up with any of your bills. We don't want to put you in this position. Okay. So we need to either wait till you have a change in your financial circumstances. That could be a lowering of your expenses. That can be an increase in your income. That can be a change in interest rates, which thus lowers your monthly payment. Right. So there's a lot of factors that go into it. So be transparent with the lender. Let them know your financial situation. Don't hide expenses. Listen, money management is a skill, okay? It's a skill. It's not something we're typically born knowing. Well, nobody's born knowing it, but some people, either from their background, schooling, education, or whatever, pick it up sooner than others. But money management is a skill you're going to have to get a hold of on this journey, just in life in general, okay? So don't be ashamed, bashful about what your financial situation is. Set the ego aside for the bigger picture. And the bigger picture is transparency about where you are today when you're speaking with the lender is going to give you the highest value of information and a plan to get you to your goal. So speak to the lender. To the lender. They're the only ones that can tell you what you'll be able to afford and what those terms are. Okay. So when you speak to a lender, the best strategy, when you're working with a lender, and you're ready to start looking for your home, you want a pre-approval letter, not a pre-qualification letter. Okay. What is a pre-approval? Pre-qualification letters tend to be produced from an automated system that basically just says, hey, the information your loan officer has given us without verifying sounds pretty solid. You look like a candidate. We might, we could lend to you. So here's a letter saying that. Pre-approval letter says, we're going to take this a step further. We're going to verify the information you gave us. We're going to verify your income. We're going to verify your assets, right? And we're going to look at your expenses. We're going to dig deep into you as a borrower. What does your financial picture look like? And that pre-approval letter says, look, we did some due diligence up to this point, and we're pretty certain we will loan money to you. Unless something changes outside of our control that we can't see on this level, you are a qualified borrower for us. So we're going to give you a pre-approval letter that says you can go purchase your home for $400,000. If you bring us that ratified contract, we will loan you the money, right? That's in short. The process of getting to the closing table is a little bit more involved, right? It goes to another step, but we want to keep things simple here. That's what you need to know as a consumer. So let's talk about this. Your lender matters. All lenders do not operate the same. They offer different value to consumers, and they have different propositions that they will sell you on, right? So your lender matters. You got big bank lenders. Let's think our Wells Fargo, our Bank of Americas, our Chase Bank, our Town Banks. The list goes on and on and on. Big bank lenders, right? You also have mortgage brokers. These are middlemen that connect consumers. They take consumer applications or consumer profiles, and they search the mortgage world, and they match consumers mortgage lending partners. Each of these have different benefit and they have different propositions that they will sell you on. Right? The big bank institutions tend to have a little bit, or can have a bit more strict lending requirements or thresholds for things like credit scores and incomes, etc. Versus mortgage brokers seem to have a little bit more flexibility at times. So if you're a first-time home buyer, and look, life happens, we get it. Credit score might not be at the top of the charts. You're kind of middle of the way, maybe lower tier, a little right on the cusp, right? You might have more success with a smaller institution like a mortgage broker, right? Things like costs. Mortgage brokers tend to be smaller teams, a lot less overhead. So as a benefit, they don't have to charge the same level of fees that you might find at a big bank. Origination fees, processing fees, lending fees. These are all monies that add up to basically money out of your pocket, money you're going to have to bring to the table. I recommend you get 2 to 3, no less. In my practice, I tell all of my clients to get 3 opinions on financing from lenders. And I've seen using this strategy has really helped my clients zero in on the best financing term that works for them. It's not just about interest rates. What is the cost to borrow this money? Does this lender charge fees? If so, what kind of fees? How many fees? There's fees out there called junk fees. Fees that you're basically paying this lender's bills for their overhead, right? That's money you can save in your pocket. Does it hurt you from speaking to lenders? No. You have everything to gain from speaking to a lender. Do not put it off. Far too many times when I speak to people and they say, I want to speak, I want to figure out, I want to buy a home, but I don't want to speak to a lender because I don't want my credit to take a hit. Right? It's a myth, okay? It's a myth that consumers being diligent and searching for the best rates by speaking to 1, 2, or 3 lenders, then a short window of time, let's say 45 days, hurts their credit. It's not true. Multiple inquiries on the lending side, and you'll see this at dealerships. Multiple inquiries when you're looking for a mortgage are bundled together, okay? Credit bureaus, creditors. These people understand that consumers are going to do the due diligence they need to find the best rate and terms when it comes to financing. So they understand that you have 1, 2, 3, 4, 5, or 6 inquiries for lending in a short period of time. Okay. As a result, those inquiries are bundled. They're bundled and treated as one inquiry. Okay. What is the impact to your credit score? It depends. It could be 0 to 5 points. Inconsequential, equivalent to you having 100 pennies and you lose 1. You lose a penny out of $1. It's well worth the expense to your credit score to have multiple opinions on your financing, especially if you're dead set on shopping for a home. Because if you don't, if you put the credit score or the nominal impact it will have on your credit score before you doing your due diligence, you could miss out on financing terms that are better for you. So if you only got one inquiry with one lender, you're only seeing one perspective and what one financing situation is available to you. That second or third lender may have way better terms in terms of way better terms such as interest rates, way better terms such as fees, grants, other benefits, right? You need to know these things. And guess what? It doesn't cost you anything. That's information you can hold on to for months, the next year. Let's say you're trying to plan, I want to buy a home in a year. That's great. But how can we set up a plan today for you to buy the home in a year? You need to figure out where you are financially. And if we're using a mortgage, it does not hurt you to talk to a lender a year in advance to find out where you are now and how to get you where you need to go. So step 2, speak to a lender. Speak to a lender. If you're looking to buy immediately, and this just isn't a research type of process for you, you want to make sure you get a pre-approval. So speak to your lender, get them what they need, have those conversations. Ask the lender for an estimate. It could be $400,000. Hey, Mr. Lender, if I borrow this money for $400,000, what is my mortgage payment going to be? What is my mortgage payment made up of? Who knows what that is? Principal, interest, taxes, insurance. PITI. Pity. Pity. This is where your mortgage payment is made up of. Understand these things. There's so many resources out there. We're not going to get into the weeds. You can do a whole seminar on financing. So we're not going to do that in this video, but maybe another one we will. Talk to your lender. Find out the fees, the costs, what it looks like on a monthly basis. I'll show you an example of a mortgage estimate and how it's breaking down for one of our good friends and partners at Bluestone Home Loans. Shout out to Chris. Cool. He has great estimates. I love his estimates. They're very clear and concise. All right, so let's talk about our mortgage payment. Principal, interest, taxes, and insurance. These four things make up your monthly mortgage payment. There's tons of mortgage calculators online. You also can speak to your lender and have them go over the numbers for you. But let's just go over an example. So $400,000 home at 6% interest on a 30-year mortgage. That's going to roughly bring you to $2,400 a month in your mortgage payment. But that's your principal and interest. So the principal, the $400,000, and your interest at 6% is roughly $2,400 a month. But we still have to add the taxes, property taxes, and insurance. So property taxes estimate is around 1% of the purchase price. So 1% of 400,000 is going to be $400. Standard coverage for home insurance, and that protects you, recommend getting it, will be about $100, let's say. So our total monthly payment, if we purchase a home at $400,000 at a 6% interest rate on a 30-year fixed mortgage, will be roughly $2,900 a month. So replace your rent that you're paying some landlord, making them rich, with your mortgage payment. There's a ton of mortgage calculators there online, but your lender can help you break this portion down of the process. All right, so let's dismantle this myth that you need a ton of money to purchase a home. So there's pretty much 3 federally regulated loans you're going to typically be dealing with when you're purchasing a home here in Hampton Roads in many areas across the nation. That's the conventional loan, the FHA, Federal Housing Administration, and the VA loan. Okay, so let's talk about what are the truths and facts behind down payments with mortgages. So let's talk about conventional loan. 3% is the minimum down payment. 3%. It's not 20%, okay? It's 3%. So with 3% down, you can get into a home. On a $400,000 example here, 3% down will be roughly $12K. Now, with conventional loans, if you're putting less than 20% down, you do have private mortgage insurance, so add another $100 to your mortgage payment in that case. FHA, Federal Housing Administration, right? So these are insured loans. So the government puts funds out there, say we'll insure these loans for these borrowers. And its sole focus is to help more Americans get into the home ownership game. The minimum down payment for FHA is 3.5%. So our same example, $400,000 home, you're roughly looking at $14K as a down payment. Okay. VA loans. VA loans for our veterans, thank you for your service. It's probably one of the best loan products our nation has. And in these cases, it's 0% down. So now you have 3 examples of situations, of financing situations that significantly limit the amount of money out of pocket for a down payment. In addition to that, there's all types of programs and grants out there that can help you reduce these costs even further. So something to think about. Again, how would you know that if you never spoke to a lender? Right? So there's so many people out there right now that want to buy a home, but they're sitting there in their head thinking they can't afford it. Speak to your lender and find out what options work for you. There are options out there, there are programs out there, and there's strategy for you. So think about that. Let's get on to step 3. Step 3, it's time to find your home. This is the fun part. This is what everyone loves, right? So you work with your agent, you go over your must-haves. Start with your bedrooms. What's the location? What vibe are you looking for? Are you looking for a single-family home out in Edinburgh, Chesapeake? Or you want a downtown Norfolk $300,000 loft? These are questions and things that build your criteria. So work with your agent. They're going to source the MLS, which 90% of homes bought and sold in our market were sourced through the MLS using a real estate agent. But there's also opportunities for off-market deal. Maybe there's just a neighborhood you really, really love, right? But there's no listings in that neighborhood. Point out the house. Let's go talk to the seller, see if we can figure out a deal there. Off-market deals are a great opportunity to find a house that you like. Start with your must-haves and narrow down from there. Also, what are your absolute deal breakers? Don't spend a lot of time looking at things that don't fit, okay? On average, most people look at 5 to 10 homes before they make a decision. If you're going over that range, you probably need to sit down and recalibrate and figure out what is actually important to you when you're doing the home shop process. In Hampton Roads, generally, we are in a low inventory market at this current time that are making this video. So you're going to need speed. So the more you understand what it is you're looking for as a home buyer, the better your chances are going to be in the market of nailing that home. Also, make sure your agent is ready for strategy. This is why it's so important. The first 2 steps we talked about are locked and loaded, because that's going to dictate and determine how you show up to the negotiating table with the seller. And listen, have fun through each and every stage of this process. It does not have to be stressful. Don't worry about it. We're going to get it done. All right, we're halfway there. Step 4, we found the home. Now it's time to make an offer. So you're going to sit down with your agent. Make sure, don't ever make an offer on a home without running comps. Why do you need to run comps if you're buying? That doesn't make sense. I'm not listing a home, right? Always run comps, because what a seller is asking for in their home does not mean that's what it's worth. That does not mean what a consumer is going to pay or should pay. Also, you want to make sure this deal gets to the closing table. Overpriced homes tend not to appraise. So the first step is you identify the home, you sit down with your agent, you guys go through comps and find out a competitive offer to make on your potential new home, your number 1 pick, your first round pick. So you're going to sit down, you're going to write the offer. What's in the offer? The purchase price. How much earnest money deposit you're going to put down? When are you going to have an inspection? What kinds of inspections? When do you want to close? Is it 30 days? Is it 45 days, right? What's your intended use of the property? These are all things. What's coming with the property? Does it have a refrigerator? Does it have a stove? Does it have washer and dryer? Or is it just washer and dryer hookups? We call it what conveys. What's coming with the property, okay? All of these details are going to be outlined in the standard purchase agreement. I'll show you an example of it here. Don't forget to grab your free home ownership guide, your guide to home ownership. You can go to Agent Joshua Smith on Instagram, links in the bio. You also can visit queensberryadvisors.com, go to buyer resources, fill out the contact form, and boom, you have your free copy. All right, step 5, let's get ratified. So you wrote the offer up, you submitted it to the seller. It's going to give a response. They may accept it flat out, or they may want to negotiate with you. Let's say purchase price. Let's say closing time. You ask for 45, the seller wants 30. You ask for closing cost assistance. The seller say, I'll give it to you if you increase the purchase price by 10K. Or any range of things can be negotiated within the purchase contract. So once the seller and the buyer have agreed on the terms, what your agent is going to work with you to help write the offer and negotiate and explain to you exactly what's happening in the transaction. You will be ratified. And all ratified means is you're now under contract. So congratulations. You submitted your offer and it got accepted. You are now ratified. All ratified means is the buyer and the seller have agreed to the terms of the purchase contract. Yay! Now the real work starts. It's a great power shift towards the buyer. Now that you're under contract, you need to give your earnest money deposit. Boom, check. You need to book your inspections. Boom, check. You need to make sure you go back to your lender and let them know that you are now under contract for what we hope to be your next home. Once you're under contract, the lender is going to start their loan application process, okay? So you're going to have a lot of moving pieces going on. You're also going to get in touch with a title company. The title company in our market, in Hampton Roads, is one of the few markets where it's very common for the buyer and the seller to use separate title companies. And the title company's job is to make sure that the contract is being upheld before any funds or property exchanges between the parties. So on the buyer side, our title company is going to do an evaluation of the title and make sure that the owner selling this property or the seller saying they're selling the property has the rights to sell the property or uncover any issues that might prevent you as a buyer from getting title insurance. So your agent is going to manage the whole process. We have a saying here in our market, and it's called staying in the deal or being in the deal. That means here at Hampton Roads, agents are involved. I am, for sure. I'm involved in each step of the process, from our consultation all the way to the closing table. So not only are we going to write your offer, negotiate it, we're going to get ratified, and from there the real work starts. Now it's time to do what we call transaction coordination, right? We're going to manage our timeline. So there's a timeline that you as a buyer have to submit your earnest money deposit. I'm going to make sure you get that into escrow. Cool. There's a timeline that we have in order to get our inspections. Most common, 99% of the time you're going to see is a home inspection. If there's any additional inspections, we're going to make sure we get that within the time frame there. We're going to make sure we get our inspections done. We're going to look at the condition, safety, any deficiencies, deferred maintenance, repairs that this property may need, and we're going to negotiate for any corrections that we deem necessary on this property with the seller. Once that's done, then we're going to hit the appraisal process. The lender is going to ask us, hey, have you done your inspections? Cool, great. You've done the inspections. Are they acceptable to you? Yes. Okay, great. We're going to go ahead and order the appraisal now. The appraisal is going to come in and the appraiser is going to tell us, hey, this property you're purchasing at $400,000, we think it's worth that. Or they're going to say, oh, we think it's worth more. That's better for you. Yay, we got equity going in. So what does that look like? Let's say we're purchasing a home for $400,000. The appraiser comes out and they say, hey, we think this home is worth $410,000. That just means you've effectively gained. You've just made money. You just made $10,000 from simply purchasing this home. That means if you bought it today and you turned around and sold it tomorrow, you can effectively put it on the market at $410 and it could sell. Now, appraisal value and market demand, what someone's willing to pay for it, are two different things. But the theory suggests that if you bought the home for $400,000, the appraiser sees the value as $410. You've effectively gained $10,000 in equity just from making the decision to purchase real estate. It's magic. There are going to be a lot of communications going back and forth between you and the lender to verify income, assets, ask questions, whatever the underwriter may need. And the underwriter is the person on the lending side who's really digging in with a fine-tooth comb this loan that they're going to make to you. So you're going to have to be highly responsive to your agent, highly responsive to the lender, and highly responsive to the title company during this stage once you're under contract. It's very important. But your agent is there every step of the way. They should be. In my practice of real estate, I am looped in on every single communication that goes to my client. There's really nothing I don't see. A lot of times I find out information far before my client does. I'm their point of contact. So get excited, stay calm. Always stay calm during this process. Real estate is going to take you on this roller coaster. Each step you get through, your emotion is going to change one way or the other, right? But just stay calm and know we're on our way to the finish line, and everything you're experiencing is pretty much par for the course. All right. So all of our due diligence is done. We're on step 7. Now we're preparing to close. So we went under contract, right? Let me back up. We made our offer. We negotiated the terms. We went under contract. Cool. We went under contract. We submitted our earnest money deposit. That's sitting in escrow with the title company. We got our home inspection. Everything went smooth. A few things to take care of, but we got it negotiated, and you and the buyer and the seller agreed to get those things corrected. Great. Appraiser went out. Lender gave us great news that the property appraised for more than we were purchasing it for, so we got equity going in. The underwriter has everything we need, and they have issued us what is called a clear to close, and they're just waiting for our closing date. You're at the finish line. Now it's pretty much a waiting game. So we're waiting for the loan effectively to be finalized. So your rates are going to lock. So the 6% for $400,000. Yeah, the lender's going to confirm that you have funds, the appropriate funds to close on the loan. Your agent is going to sync with the lender, title company, and the seller to make sure everything is in order from all sides. Okay, you're just steps away from getting your keys. You just need to sit tight. Don't make any crazy decisions like buying a new car, right? Or opening a new credit card, or making some large purchase somewhere. That's just going to set you back. This is the time to just cool out. We're about to close. Step 8, the last and final step. It's closing day. Yay! We did it. We got a house. 30 days ago, we thought we couldn't get a house, and now we have a house. We're going to pick up our keys. You're going to show up to the designated area, Keller Williams Town Center. We're going to meet in our conference room with the title company. Shout out to Universal Title. We're going to meet with them. We're going to sit in the conference room. They're going to bring out a stack of papers like this thick that deals with your new home. Disclosures, affidavit, tax statements, legal documents, things dealing with deed, title, all kind of state and legal disclosures and things that the attorney is going to go over with you. It is the most fun and most boring process of this whole journey. Fun and exciting because you're like, I can't believe I'm getting a house. What else I got to sign? What else I got to sign? And boring because it's a bunch of paperwork, right? So it's great. You're a homeowner now. You're going to sign your documents. You're going to pay your closing costs, give that check over. You're going to grab your keys. You're going to give me a hug. We're going to take a picture. We're going to celebrate. You like champagne? We're going to pop champagne. We're going to celebrate you and your success. You, your family, whomever. We're going to celebrate your success of buying a new home. It's your new home. It's your new life. And you just done it in 8 easy steps. Listen, I hope this was super helpful for you. I hope this was an enlightening talk. If you have questions, drop them in the comments. Let me know what you're thinking. Is there something that you want to hear more about the home buying process? Let me know. If you're a first-time home buyer and you have plans, you want to be one of the success stories following this video, shoot me a message, smith.joshua@kw.com. My contact information are right there in the bio in the description. I would love to connect with you. I would love to sit down for your discovery meeting, your buyer consultation, and find out what your dreams, goals, and needs are and how to get you there. It's been an absolute pleasure chatting with you guys. This was the 8 steps to buying your home right here in Hampton Road, and it's too easy. We out.